Yesterday, we learned about what is this manufacturing, different types of manufacturing processes existing in Microsoft Dynamics. High level brief I have explained you. If you want to understand more discrete manufacturing, it will be in USMF. If you want to understand process manufacturing, then you will find more examples in USP2 and USPI. Okay, of course, lean manufacturing is in USMF. So whenever you are doing production order, at that time, if you want to calculate estimated cost price, then there are mostly three parts. One is BOM calculation, BOM lines. This is BOM lines. Next, route. Next, costing sheet. So BOM lines means bill of material here, raw material cost plus process cost. Here process means how much time an employee or a machine worked. For that, the cost should be included. Next, overhead charges will be there. Overhead charges we'll discuss in deeper coming sessions. So these are the three parts you need to understand deeply. Next, I have explained you purchase order process, how to do it. So purchase order creation, production order creation and end. Production order creation, estimate. Then during the estimate, we'll find the estimated cost price. Okay, next, operation scheduling, job scheduling. Okay, either one you can execute, operation scheduling or job scheduling. So if you are doing operation scheduling, then route will be updated with the dates. If it is a job scheduling, route will be updated with date and time. There is a major difference. Here, date and the time also will be updated, accurate. So what is this? We'll discuss later. Fine. Next, we are releasing. If you are clicking on release, then jobs will be released for process. Jobs will be updated. So this job scheduling only, it will create jobs. So regarding this job scheduling, I will discuss with you in future coming sessions. Now, next one is start. If you click on start, raw material consumption will be updated as well as route card or job card will be updated. Route card or job card. Next, report as finished means here FG item or BOM or FG item will be updated during report as finished. And during this start also, a temporary accounting entries will be updated. For the picking list journal, route card journal, it will be updated. And then report as finished also, accounting entries, temporary accounting entries posted. At the end, accounting entries, the final accounting entries will be posted. Even though you are a non-finance consultant, suppose you don't know about finance, but you should know about this accounting entries. It is mandatory. You are going to understand this accounting entries. It is must. Okay. Accounting entries also very, very important. You need to understand the accounting entries as well. That is one of the most important topic you need to learn. Fine. So now today, I will discuss with you the difference between FIFO, LIFO, weighted average, moving average versus standard cost method. This is very, very important. Standard cost method. If you are touching standard cost method means then product information management and inventory management. Here, posting. This standard cost variance accounts will be posted. Okay, if you are using standard cost method. Otherwise, if you are using FIFO, LIFO weighted average, then this will not touch. Standard cost method, this will not be touched. So if you want to understand standard like manufacturing process, One of the important. So if I'm running my manufacturing business, suppose I can use FIFO, I can use LIFO, I can use weighted average or moving average. I can use standard cost method. Any method I can use it. There is no rule. We need to use the same. But if you are using standard cost method, you are getting extra benefited. Whatever it is required, relevant for manufacturing process, that extra benefit you are going to get it. Fine. Now, during purchase process, this will be different and this will be different. If it is a standard cost method, the behavior is different. If it is normal item with any model group, FIFO, LIFO, weighted average, or LIFO date, or weighted average date, or moving average, all are same, little bit similar, but standard cost will have different behavior. So let me focus on this standard cost method now. What is the extra function designed for standard cost method? Let us understand now. I'm taking duplicate. So product information management, released products. So I'm showing you accounts payable parameters, accounts payable setup parameters. So here, post product receipt in ledger is disabled. Post product receipt in ledger, if it is disabled, what happens? I think some people are from finance, I know. If it is disabled, what happens? If it is enabled, what happens? Can anyone? Few of you are finance also consultants, I know. Yeah, if it is enabled, disabled, what happens? What do you know about this one?
Interim cost will be updated, Satya.
Exactly. So at the time of product receipt, the financial entries will be updated if it is enabled. If it is disabled, it will not be enabled. It will not be posted. Agree? Let me go to finance. So let me go to finance. This is a finance topic. You should know finance. If you enabling product receipt, the temporary interim accounts like cost of purchase material received account at R2, purchase accrual account credit will be posted at the time of product receipt. So now I have disabled. Now in this case I disabled. Then is it temporary accounts will be posted? It is disabled?
No.
No, it will not be posted. Now let me show you the process. Raw materials. M001, 2, 3, 4, 5 like this it is there. This is default data provided by Microsoft. So for this one, standard cost method is there. Item model group is standard cost. Standard cost model. Give me a second. I'm opening this item. Okay, this is standard cost method. Fine. Now manage inventory, on hand inventory. Just I'm checking how many quantity available. So 11 for 11 warehouse, 12 warehouse, and 21 warehouse, we have the stock. Now, I'm creating a purchase order. Procurement and sourcing, purchase orders, all purchase orders. And remember, you know this four, let me copy item master. While creating an item master, you know, one is purchase price, sales price, inventory price, and system calculated cost price. Is it clear? These four prices, are you sure anyone is having any doubt on this area? Are you sure about this purchase price, sales price, inventory price, and system calculated cost price? Anyone have any doubts? First, I will show you. On top of that, I'm going to show you one more price. Is it clear to everyone? Please unmute.
Clear. Yes.
Everyone. Okay, fine. Everyone clear. Now, let me recap quickly. I will show you where it is available and we'll proceed. Purchase price is here in the purchase fast tab. Sell fast tab, you will find sales price. Manage costs. If you go to manage costs, here it is inventory price. On hand inventory, if you go inside, it is system calculated cost price. Okay, fine. Now I'm going to show you one more price. Select the vendor. Any vendor is fine. Select the warehouse. Click OK. Select this item M0001. Okay, I'm entering here $4. 4.1 or $4.1. So I'm doing confirmation. What is the stock? Let me make it for 2 and 21. We don't have much stock. Let me take warehouse, right to 21 warehouse. So 4.1. Okay, if I entered here, it will show you ordered in total 2 quantity. Ordered in total 2 quantity. Now I'm doing confirmation. So during confirmation, there is no change. As it is, it will be same, will be there. No changes. From the on-hand inventory, there is no changes. Now I'm doing product receipt. I'm doing product receipt. Click OK. Inventory dimensional location must be specified. Let me update this one. Let me do confirm again. I'm doing now product receipt. Click OK. Now, if you verify the voucher, transfer now. Actually, I have disabled, but it is posting temporary accounts. Okay, here one account name is purchase price variance. This purchase price variance is defined here. Purchase price variance, it is updated here. So now, what is this actually? In this, you will find Manage Costs tab. Manage Cost tab, Setup, Item Price. Here, 3.85 is the standard cost price. So 2 multiply with 3.85. Okay, it is 7 point whatever it is there, 7.7 it is updated, but we are purchasing at the rate of 4.1. 4.1 multiply with 2, it is 8.2 we need to accrual amount, but 8.2 minus 7.7, the difference is 0.5 is posted to purchase price variance. Here 3.85 multiplied with 2 means 7.70. So it is updated inventory value, cost of purchased material received. Cost of purchased material received account is updated with 7.7 only, but not 8.2. The cost of the material is updated with 7.7, not 8.2. But even though it is disabled, let me proceed and then invoice. This is a special behavior for standard cost method. I'm doing invoice. Update mass status past, then post. Now, if you verify the invoice voucher, at present is not showing. Let me transfer. And then we can see here. Look at this one. This is taxes. You can ignore taxes. So 8.2 plus 2.24 is the vendor balance. So 8.2. But cost of the material invoiced also 7.7 only posted. That price difference is posted to here. So material received account is reversed. Okay, and then accrual account is 8.2. Vendor balance is 8.2 plus 0.24, total 8.44 is posted vendor balance. So 8.2 material cost we have received, but it is updating 7.7 only. The reason behind, whatever you have entered the price in the manage cost tab, the same price will be continued here also. If you go inside, if you verify 3.85 only. The system calculated cost price is 3.85, but even though you are purchasing at the rate of 4.1. This is the special behavior of this is standard cost method. So all rest of the methods, inventory model group, different, only standard cost method is different. This is specially designed for only manufacturing cost, manufacturing processes or manufacturing industries. So any questions on before proceeding deeper? Any questions about this one? So apart from this purchase price, sales price, inventory price, cost price, system calculated cost price, we are having standard cost price. Yes, please proceed.
Sir, in that case, there is no relevance to this inventory value report and inventory aging report for this standard cost products, right? It will be showing the same cost for
yes,
every age.
every item it will show you like this only.
There is no meaning like inventory value report as of now. It will not show anything there.
Inventory value report is for inventory value. How many it is there? It will show you. No, I did not get your question here. So, 3 multiply with 8.5 is the inventory value.
So
no.
Inventory value is for multiplied with this item price only, or like it is showing the cost of material invoiced only for that standard price only, sir. So it will be showing that price only, right?
1 second, wait. In which screen you are referring?
Go to your vouchers. Go to your vouchers, sir. Vouchers, posting vouchers.
Okay. Tell me now.
Oh. So here the raw material cost of purchase material invoice is showing like 7.7 only.
Yes.
So in that case, inventory value
Hmm.
report will be showing that this 7.7 only, sir. That is
Exactly right.
standard cost multiplied to. So
Yes.
we don't need to
Hmm.
any inventory value report for it all for this case. Standard cost material. There is no use, like we can just see the
Inventory value report. Okay, inventory value report. We don't need means we need 7.7, am I right?
yes. And that will be showing
Hmm.
7.7 only. Every time it will be
Exactly
showing
right.
7.7 only.
Yes,
Yes, that is what.
yes. Yeah. It will show you 7.7 only. So the difference, whatever you are purchasing here, product receipt, the difference is posted to 0.5 in the purchase price variance. Now, what is this actually functionality? The business process. Okay, little bit tricky. It will take some time. Okay, but I will explain you. I will try to explain you. A little bit complex to understand business process. What is this business process? Speaking. Okay, fine. So just give me 1 minute. I'll be back in 1 minute. Okay, so now what is the business process behind this standard cost method? Let us understand. So this is a little bit tricky, but little bit complex, but let us understand. Suppose you are purchasing, you are selling laptops. Computer systems. You are selling computer systems. So we need to purchase monitor, CPU, keyboard, mouse, cables, becoming computer system. Of course, this is very simple. Anyone can do it. So I'm not taking this one. I'm taking another example. Fan manufacturing company. Fan manufacturing company I'm taking. Okay, here it is 1500 rupees. The price is Crampton White High Speed Short Breeze something ceiling fan, 1500 rupees. So fan sales price is 1500 rupees. Now fan will have wings. Okay, hook, rod, and then motor. Okay, I'm assembling all these things and I'm selling. Okay, so example inside components also I'm purchasing. Like copper, there are so many components will be there. I'm purchasing. Now wings, it is 3 wings required. So major part is motor. So one is 500. It is 500. Sorry, wings at the rate of 100. It is 300. Hook rod is one is 50 rupees. It is 50. And rod is 50 rupees. So the total amount is 500, 800, 900. Total 900. But overhead, like overhead charges is 300. What is this overhead charges means? If I'm running business means manufacturing company I'm running, there are so many charges, 300 rupees. Okay, one more, sales team, etc. I need to spend extra 100 rupees. Now the total is 1300 rupees. I'm getting profit of 200 because it is office expenses. If I want to run office, we need, this is manufacturing industry, this is office. Okay, my cost is, total cost is 1300 roughly. Now I'm selling at the rate of 15 rupees, 1500 rupees. So this is usually in normal situations, some of this like raw material components, overhead charges, office running, all these expenses together, whatever it is there, plus I'll take margin. What is my margin, expected margin? Based on that, I'm going to arrive sales price. Sales price. Okay, so this is 1500. Now, take the example, one company, what we can take the example. So, one institute, they have opened training institute. This training institute, they need 200 fans or 1000 fans. A big premises it was taken, required 1000 fans. Need 1000 fans. So if you go there and if you are asking, can you sell the same at the rate of 1500 rupees? If you are selling at the rate of 1500 rupees, whether customer will purchase this one? No, am I right? Agree? Why customer will purchase if this retail price is 1500? If I am purchasing 1000 pieces of fans, suppose I'm a customer, I'm approaching your manufacturing company. I want 1000 pieces. So I'm bargaining. What is the best price you can give? So the sales and marketing department, sales department, they are bargaining. What is the best price? Okay, then if you are saying like 1400, they are not agree. Now, like the customer is asking at the rate of 1250. If you are giving 1250, I will purchase from you 1000 fans. Then what is your approach? Are you going to cancel the deal, or are you try to win the deal? Now customer is interested to purchase 1000 fans. 1000 fans. Sales team here, the sales team, they did it excellent job. They brought a big deal. What is the solution with you? You are running a business. What is the options with you? Now customer is asking, if you are going to give me at the rate of 1250 rupees for each fan, I'm ready to purchase 1000 pieces. I want solution. You know to think. The same business, it was came to you. What you will do? Anyone, please?
We'll sell.
Sorry?
We'll make a deal.
Will
We'll
cancel
make
the
an
deal?
agreement. No.
How you can
We'll
make
go.
agreement? So now it is not possible for you. It is not 1250. It is your cost is itself is 1300. How can you sell?
The office expenses, right?
This is sales and marketing salaries. Sales team salaries. Are you going to remove? Can we remove sales team salaries? Sales team and purchase team salaries.
No, we cannot.
Then where can minimize it? So this is DMart strategy. You know DMart supermarkets. They will give best price. The best price. See, he is asking, the customer is asking at the rate of 1250. Now, can you demand this vendors? I'm going to purchase from you 3000 wings. What is the best price you will give it to me? Am I right? You are selling individual pieces, each one wing, 100 rupees. Okay, fine. Now I am purchasing 3000 pieces. What is the best price you will give? Agree?
Yes.
So here there are three departments. One is sales and marketing department. Purchase department also it will be there. Purchase department. Now, purchase department, they need to showcase their capabilities. What is their capability? Of course, the price is 300, normal price. We are not purchasing 5 or 10 wings or 20 wings, 3000 wings, 1000 motors I am purchasing. What is the best price you will give? I am bargaining. My purchase department now purchase department, they need to bargain with the vendors. It is not ordinary price. We need to get at least at the rate of 450. And wings may be 80 rupees. And this may not be margin is very less, maybe same. Maybe here it is 40 rupees. This may be same 50 rupees. Now the total amount is decreased. Here 50 rupees, here it is 60 rupees and 10 rupees. Maybe here it is one more 10 rupees. So we can bargain. This is standard cost price. This is standard cost price committed by purchase department. They are going to bargain with the vendors and they promised purchase department, they have promised and they are going to bring this best price. This price we will update here as a standard cost price. This is committed by purchase department. If in case they failed, then the differences will be posted to purchase price variance account 510310. So general ledger, chart of accounts, main accounts 510310. Transactions. Here I can monitor what is the value of this amount. If it is keep on increasing, then I need to increase the sales price. But now we can monitor these values continuously. What is going wrong with this one? Here it is there. Got my point? This is the differences. What they have committed, purchase department, what they have really got. Suppose they have promised at the rate of 3.85, but they have bargained, best bargain 3.70 only. I'm proceeding now. M001 2 quantity 3.7. 2 more quantity we are purchasing. Let me proceed. Confirm. Receive product receipt. I'm doing product receipt. Click OK. Now let me do transfer. Now the voucher is, even though it is 7.7 is updating, but it is 7.4 only. Net amount is 7.4, but it is updating 7.7 inventory price. Price variance is updated with -30. That means they are well done. Purchase department is there, well done. So this amounts, the purchase price variances amounts, I need to keep an eye what is going on. Because if it is negative, then they are well done. They are doing, purchase department is doing perfectly. If they are, if it is not, it is positive amount, this is positive amount, then purchase department is not doing as per their commitment. I can monitor. If it is updated with normally inventory price, like here, if it is increasing and decreasing, if I want to track each transaction, it is a very hectic job. So if I go to purchase order and if I verify transactions, if I want to verify one by one what is going on, it is very difficult. Okay, so they have committed some price and it is coming different. Suppose 3 point like 7.4 or 8.2, if it is posting, I cannot track it. So now whatever the committed cost is it is posting here. Okay, the difference will be posted here. So inventory price, it is, if it is updating here on hand inventory, if I want to verify one by one transaction, it is very difficult. I cannot. So simply I can monitor this report, because manufacturing is always bulk purchases only. Bulk sales we will get it. We'll get order for bulks. It's not like 1, 2, 3, 10. No. The bulk orders we are going to receive. Then whatever the sales team is bringing, then purchase department and sales department, they will, finance department, 3 departments sit together. They will decide whether we can achieve this price or not. The best example for this one is in 2004 or 2005, Geo phones. Now at that time it is Reliance phones. Reliance phones, at that time the price of the phone is normal basic phone also 10,000, 15,000, 5,000, 8,000 like that. Normal basic phone. It is around 6,000, 8,000, 10,000 basic phones. In 2004, Reliance has given for 500 rupees. And of course, talk time, incoming and outgoing, both are chargeable at that time. Both incoming, outgoing, both are chargeable. So the margin they are getting. So they have ordered bulk manufacturing, Reliance phones. Okay, if you know that one, at that time in 2004, 2005, Reliance phones in 2003 or 2004. In basic CDMA mobiles handset, it was given at the rate of 500 rupees. Okay, these are the mobiles. Because they purchased bulk. They purchased bulk, millions, lakhs and more lakhs in lakhs they have purchased. So in 2001, in 2003, mobile cost is range is 2000 to 3000. It is once again coming Reliance, not Reliance. Actually, I want see high-end phones. It is 14,000. So in 2028.2 millions, they have purchased something. But Nokia mobile, I will take. So 3,800, 4,000. Entry level price 4,000 rupees. But they have given 500 rupees. Why they will give that much loss? Because their talk time, they are compensating talk time, and because of this bulk, it is decreased a lot. Everyone is having Reliance at the time. Reliance will have, everyone will have Reliance mobiles, these handsets. This one. So 2 years talk time, something. There are so many offers. Are you getting? See, it was clearly mentioned around 4,000 rupees. But they have given you 500 rupees. This is a sales technique. So bulk, and they are getting talk time using the, because you cannot use SIM, other SIM, you need to use the same SIM. So from the talk time, they got money a lot. Of course, the price of this material, actually, if the Nokia is selling at the rate of 4,000 rupees, they cannot sell at the rate of 100 rupees. Am I right? Agree with me? It's impossible. So why I'm saying here, always like manufacturing means bulk orders we will receive. Even this DMart, what they will do? Wholesale, they will go to sugar manufacturing companies. So they are selling at the rate of 70 rupees. Normally, retail market price is 100 rupees. So they are selling at the rate of 70 rupees, suppose. They will go and they will ask like bargaining, I will purchase 2000 ton, 200 tons, 500 tons. What is the best price you will give it to me? 62 rupees, 63 rupees. 500 tons I will purchase. So this DMarts usually whenever they are opening, they will open outcuts and they will purchase the place, and the building also very not super like other markets, other supermarkets, average construction, and they will keep this one and they will open DMart. Outcuts, particularly in small villages, small towns, they will open outcuts because bike parking, car parking will be free. Outcuts, the place they will purchase and they will open and they are selling. So ordinary, like now suppose I'm a wholesale distribution company, I'm running company. So I will purchase it from the sugar manufacturing companies maybe at the rate of 75 rupees. But this DMart will go and they will ask at the rate of 65 rupees. The cost may be 63 or 62. By 12 rupees, 13 rupees, they are selling wholesale. Now, like this DMart will go and I will purchase 65 like 500 tons, give me at the rate of 65 rupees. Even it is 2 rupees, 3 rupees margin, I'm getting big deal. Let me proceed. Like this they will do DMart. So now it is reversing based on the sales price. Actually, the sales price is 1500. because we received bulk order for 1000 pieces or 10,000 pieces fans. So we need to bargain, purchase department need to bargain from the vendors because it is a big deal. Then their committed cost price, purchase department committed cost price will be updated in the system as standard cost price. If it is any deviation, if they are not like achieving or not, I need to keep an eye that I can keep here as a differences, purchase price variances. I can capture. So if they are getting lesser than this price, then it will be minus. If it is more, it is plus. So I can track here rather than verifying one by one transaction. It is very difficult in normal situations. If you want to verify what is the committed price, what is the price we are getting, if you want to understand, it is very difficult. One by one transaction, if I want to capture, very difficult. So we can see here what is going on. So you can see the voucher simply. So here this is minus purchase price variance means they have performed well. So it is company get benefited. If it is this one, it is a loss. Extra they are purchasing. So if the amount is increasing here more, then we need to monitor what is going on and we need to sit together and what is the best price we can give to the customers. Wholesale deals we can think. Okay. Is it clear? Any questions, please?
Yeah, clear.
Okay. Only for standard cost method is a different function. Okay, fine. So this is peak information what we have discussed. Now let us understand normal procedure. If you want to do production order, yesterday we understood. If I want to do production order, we need three parts. One is BOM, one is route, another one is overhead charges. So BOM, I hope you know already BOM, but I need to refresh your knowledge. First BOM. We need to understand BOM very clearly, how it is created and everything, BOM related functions. Once it is cleared, we'll go to route function, how it works. Okay, so for this, I'm showing you computer system. So this you will learn in trade and logistics. In reality, whatever I'm discussing now, this is part of bill of material, is part of supply chain management, trade and logistics. But this is the main pillar for this manufacturing. Let us focus on BOM, bill of material. Let us focus on bill of material. Okay, if you want to make computer system, we need monitor, CPU, keyboard, mouse, cables. So monitor, CPU, keyboard, mouse, cables. All this combined together, you are making BOM, that is computer system. So I'm creating a new item. ASK092 is available, 93, 94. Okay, computer system. Item model group, item group, storage dimension group, tracking dimension group. Okay, so I'm clicking OK. So new item created. It's a new item created. Now, if you verify manage inventory, on-hand inventory empty. So for this item, first you need to verify engineer fast tab. Engineer fast tab. Production type is BYM. Production type is BYM. If it is BYM, then in the engineer tab, BYM engineer tab, BYM area page, you can see this function. If in case if you enable formula, then BYM area will be disabled and formula area will be enabled. If you make it none, both are disabled. BYM area also disabled, formula area also disabled. Now we need automatically whenever we are creating it is BYM. Remaining co-product, byproduct planning item, we'll discuss this one later. So BYM. By default, whenever you have created an item, the production type is BYM. If it is production type is BYM, so BYM area page in engineer tab, BYM area page will be enabled. Fine. So along with this one, you will have a route also. Here we'll see this one route later. Route or route. Fine. Once BYM is enabled, then BYM area page is enabled. Go to BYM versions. Mostly, most of all of you, you know this one already, but I want to very much clear about this one. Now here there are 2 points. One is BYM version and BYM. Okay, so one is BYM, another one is BYM version. So I'm creating BYM and BYM version. So ASK 094 BYM I'm creating. Click OK. Now look at this one. Here there are 2 screens. Look at this one, BYM version. In this BYM version, there are 2 tabs. One is BYM version, another one is bill of material. These 2 tabs are part of BYM version. Now, if you want to understand BYM, now you need to go to BYM bill of material tab, maintain BYM. You need to click on bill of materials button. Then this is bill of material form. If you go back, this is bill of material version, not BYM. We are in BYM version. Okay, you need to go to bill of material form or screen. You need to click on new. Now, what are the materials required? ASK 022 monitor, ASK 023 CPU, ASK 024 keyboard, ASK 025 mouse, ASK 026 cables. All these components are required. Okay, monitor, CPU, keyboard, mouse, cables. Now, if I want to make one computer system, one monitor is fine, one CPU is fine, one keyboard is fine, one mouse is fine. but cables I need 4. So if you want to make one computer system, power series means one system, we need 4 cables. We need 4 cables. See. Once it is defined, this is, don't look at this one, look at this one. This is, we are in the bill of material screen. Here we need approval. So I'm doing approval. So this is an employee, should be approved. Okay, so this employee is from human resources. Anyhow, whenever I'm explaining about new company, I'll show you, should be employee of this company. So employment should be exist here. Employment should be exist. Okay, fine. Now approved. Next, you can go back. This is, we are in the form bill of material. If you are looking at this one, it will be confusion whether you are in bill of material or bill of material version. BOM version or bill of material, you will confuse. So you need to look at the screen, bill of materials. You are in the bill of material. Go back. Now you are in the BOM version. If you are looking at this tab, it will be confusion. You cannot understand whether you are in BOM or BOM version. Now you are in the BOM version. Okay, so here now we can have once again approval. Here approved is no. Next approval. Next is not activate. So now B1 is ready. So if you verify manage inventory, on hand inventory, empty, but bill of material is ready. Okay, the same BOM you can see from here also. Designer. And you can add here also. Add before. Add after. From here also you can do it. Whatever the action you did it, everything, whatever action you did it here, everything you can do from here also, designer. But little bit tricky, complex, but you can do it. Add whatever you want. And approval also. PWM create. All these things we can see, we can do here. Okay, fine. But this is look and feel will be easy here. This is for view purpose, we can see. Because if it is 2 levels, 3 levels are there, you can understand this one. We'll see this slowly, deeper inside next week. Fine, we have created bill of material. Now I can do production order. So ASK 094 computer system. Now default site and warehouse is not coming. I want to capture default site and warehouse. I don't want to select manually. Then release product. Default order settings. Here I can map inventory tab, purchase order tab, purchase order fast tab, inventory fast tab, sales order fast tab. Now we are learning inventory fast tab. Okay, it was saved. Now, if you reselect, it will populate automatically site and warehouse. In the default order settings, whatever you have configured, that is coming here. Scroll down. Now BOM details are coming, but route number is not coming because we have not enabled any route, only bill of material. So I'm clicking OK. Now in this, there are three options. Ledger postings, the financial postings, item and resource, item and category, production groups. This is very, very important. You are going to learn in the coming sessions. Fine. Now I'm proceeding. I don't have route now. We can proceed. So like production order is created. Okay. Now, before clicking on estimate, we'll see what is the cost view calculation details empty. Now I'm doing estimate. Click OK. Now manage costs, view calculation details. So material cost and overhead charges, only one it is coming. Remaining process cost, that is route consumption, it is not there because I have not created route. Route values are not coming. So route related setups also, overhead charges also, only one is coming, remaining are not coming. This is coming from the costing sheet. We'll discuss this point later. Now material cost. So 210, 510, 105, 52, 44. Total amount is 922.50. This is like a machine depreciation. Okay, this is estimated cost. So now, in reality, there is no operation scheduling, job scheduling, not required. Why? I'm not doing any route. If the route resources are there, then we are going to use operation scheduling or job scheduling. So no use. Even if you execute or not execute, no use. Because there is no route, there is no functions here. At present, without route also you can proceed. Now I'm clicking on start. Click OK. Now if you go to all journals, we can see together. See, this is individual journal, picking list journal, route card journal, job card journal, report explanation journal, all journals together we can see here. So now the raw material cost is there. Fine, I'm posting. Okay, now fine. Now, once it is posted, you can see here production postings. The entries are coming. Only two. Route related functionality is not coming. If you verify here, actually I need to show that one. Raw material will be decreased, meaning if you verify on hand inventory, inventory management, on hand list. Before posting, I need to show this one, but I missed. It was missed actually. Here, it will be decreased. Monitors will be decreased 1. CPU will be decreased 1. These all are 111. Cables 4 will be decreased. So it is showing physically reserved. Okay, so fine. It was decreased actually because we have posted production order decreased. Now, at present, on-hand inventory for this item ASK 094 computer system Still it is ordered in total only. We have not received. As soon as if I did report as finished, it will update physical inventory. As I told you, report as finished means here FG item will be increased. That's what I have mentioned. Now, if you verify, one more journal created, report as finished. One more journal, it was created, report as finished. Okay, next. And journal is created. Next one is postings also. Okay, material cost. This is material cost. This is machine depreciation 1.5. Now I'm doing end. Now, if you verify, these 4 entries will be reversed, total 6 entries reversed, and the final entry will be posted. Got it? At the time of material consumptions, picking list, 2 transactions created, 1 journal, 2 transactions. And this one, 2 vouchers, 4 transactions, total 6. Those entire 6 will be reversed at the time of this one. Okay, now it is another 4 or 6 will be posted. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Extra 6 transactions posted. Regarding these transactions, I will discuss with you coming soon. In the coming soon sessions, I will discuss with you. First, you need to become strong in BYM. You need to become in resource like a route. And then you need to understand these 3 parts very clearly. These 3 parts, once you are clear, then I will go to accounting entries and I will discuss with you accounting entries. Okay, fine. So at the end, those 6 lines will be reversed and new 6 lines will be posted. Finally, manufacturing cost is this. The finally manufacturing cost 891.26. It was posted now. 891.26. Okay. So clear, any questions please about this BYM, bill of material? So BYM we understood a little bit. Okay, there are so many things you need to learn. Now, what is formula means? In formula, process manufacturing. Okay, if you go here, if I open, just I'm introducing. It is formula means it is the production types formula. Now, B1 area will be disabled, formula area will be enabled. In formula version, we have extra co-product and byproduct. Co-products. If you go inside, you will find co-product and byproduct. This is not available in bill of material. In BOM, this will not be available. Next, if you go to formula inside, we are in the formula version. Go inside formula. Here, ingredient types, it is there. Ingredient types. And one more function here, scalable percentage. Scalable and percentage available. So in formula, you have three functions, extra functions. One is co-product, byproduct. Co-product, byproduct functions. This is one function. Next one is ingredient type. So active, compensating, and filler. Ingredient types you need to understand extra. And then here, scalable percentage. Scalable percentage also one of the. So these three features are extra in process manufacturing. Okay. So process manufacturing means it is more about liquids. More about, of course, dry atoms also will be there, but more in term, if it is a liquid, for sure it is formula. If it is a liquid, manufacturing company is related to, if they are using liquids, then for sure it is process manufacturing. Mostly. Next. So if you verify D006, okay, here engineer tab, BWM versions. Look at this one. If you go to bill of material, you will find three different images. Item, you can see here. This is item. This is sub BWM. That is called pegged supply. And this is insurance. Is a subcontracting service item. This is service item. This is normal item. This is pegged supply. Pegged supply means sub BWM. What is this? We'll discuss in detail. So in the next week, we are going to understand bill of material a lot. Of course, you know some extent bill of material, but you need to be perfection in bill of material functions. In bill of material function, you need to be perfect. So we are discussing this one. Okay, I'm stopping here now. We'll connect once again next week.
Okay.
So whoever is joining for PMA, please join for PMA. Okay. See you all. Bye-bye.
Bye.
Bye.